829 days till New Holland. Fear and Greed Index is at 20%, which is extreme fear, and Bitcoin is currently trading at the 36.2k area, still trading below the 40k resistance, 30k support above the 30k support is trading kind of in the middle of it. Nothing changed. Yesterday we had a pump to the 39k. And after the news from Federal Market Committee, there was no changes. There was pretty much Bitcoin went back to the average prices that was after the crash that we had a week ago. So kind of no changes. But at the same time, Jerome Powell said that it will focus in the next March. It will focus on a curb of inflation to curb it down, even if it means slowing growth down, which means even with a tight policies, with a hike interest rates, with a stock market going down, will sacrifice growth of economy for the stability of inflation rates. Later on, we're gonna talk about them. So let's right now focus on a Bitcoin. On a daily time frame, RSI looking oversold, MACD red phase, volume above average. On a weekly time frame, Bitcoin is currently MACD in a red phase, RSI is slightly oversold, volume average. On a weekly time frame, by the way, there's some cute doji that is signaling the reversal, which is pretty nice. On the monthly time frame, there's no changes, MACD red phase, RSI neutral, volume average, pretty much no changes on a monthly time frame. So yeah, 19 days left till the 3 months correction from all-time high to the bottom, if we're gonna compare to the previous year. Correction that we had 3 months there. BTC dominance currently 42.5%, and all of the altcoins are following the Bitcoin, nothing special there. So that's pretty much all TA for today. Let's move on to the news. Obviously, there's some big news from Federal Market Committee meeting. And I'm pretty sure already said what was there. There was literally no changes. Jerome Powell said the current labor market is pretty strong, even if he said that even if they're gonna slow the growth of economy, labor market still will be strong. So yeah, let's focus on okay, let's explain what Federal Market Committee does. What's the point of the Federal Committee, what's the consensus of a Federal Committee. And it is actually pretty attached to the stock market, because stock market is pretty of US, again we're talking about only about US right now, is pretty attached to the economy growth. The current inflation rate is 7%. Previous month, December, it was 7%. And forecast for the next month, for the current January close, would be 7.1. And the next meeting of Federal Committee would be in March, so technically in 2 months. So if we're gonna have next 2 months growth of inflation rates, if it's not gonna, probably if it's gonna start flattening, like it's gonna be 7%, maybe 6.9, probably there's gonna be again no changes in the Federal Committee regulations. But if it's gonna continue going up, like it would be 7.1, 7.3 maybe in the March, definitely we're gonna see spikes in the interest rates and some policies. We're gonna see what type of policy is gonna be there, because again this type of problem is attached to the stock market, attached to the inflation, so there's gonna be pretty interesting policies there. So let's talk about what Federal Market Committee does, why it exists, what type of calibration does the Federal Committee, and why it exists, and why it's called regulator. So Federal Market Committee actually has a consensus for the economy, even for the, which is pretty extremely attached to the stock market. You can actually just correlate it to the stock market and also to the interest rates. So the current consensus for the inflation is to have average 3%, 2% inflation rate for the US. When it goes up, it's obviously being calibrated. I would say Federal Market Committee is a calibrator. Calibrator would be pretty simpler word to understand. It calibrates the spikes above or below or outside of the consensus of average growth. So when inflation goes above the consensus, it's being calibrated with a high interest rates and some policies. Again, later we're gonna go back to the previous stock market crashes when it was in a dot-com bubble in 2000 and housing market, what type of difference it was between the policies and interest rates. Later we're gonna talk about that. So when inflation goes above the consensus of 2-3% year over year, it's being calibrated, regulated with interest rates, mostly with the interest rates and some small policies if it's not a significant problems in economy. and then it goes down to the 2%. Same goes to the deflation, but deflation is being calibrated pretty fastly. If you're gonna look at just in general of the inflation rate in the US, it's always being calibrated pretty fast. So I don't think deflation is the problem for the US, but inflation is, and it's always being calibrated by the Federal Market Committee. And same goes to the economy and stock market. Let's just correlate the economy with the stock market. For example, the current general consensus of growth year to year for the stock market is, let's just say, S&P, and like a standard for this consensus is S&P 12% year over year. So when S&P goes down because of recession, for example, or again, we're gonna later talk about other pretty big crashes and what was the problem there and how it was fixed. But the current problem we had in a March, because of COVID crash, we had a recession, 35%. It was calibrated by the Federal Market Committee. Again, you need to understand Federal Market Committee works for the majority of people, for the majority of investors. It doesn't work for the people who bought at the bottom. It does not getting effective for the people who bought at the bottom or who bought at the top at all-time high. It doesn't, those people does not affect the decisions of Federal Market Committee, just so you know. Later you're gonna understand why. And for example, when stock market is down 35% and Federal Committee comes to you and says, you're down 35%, we need to fix this. Obviously, it sounds extremely nice and you're pretty happy and stock market goes up and you're back to the green and pretty nice. It goes back to the consensus of 12%, but this one is going to be pretty brutal, and a lot of people definitely not going to understand that. But from just a neutralish perspective, from just no emotional perspective, it makes total sense. But when stock market goes up 35% year to year, is that can be determined as an imbalance? Is that outside of the consensus? Yes. Is that instability? Yes. Is that so when you're up 35% in a year on a stock market and Federal Market Committee comes to you and says, you're up 35%, we need to fix this. It's not sounds nice, especially, and I said about people who bought an all-time high, who is up like 1%. Federal Market Committee comes and says, you're up 1%, we need to fix this, and stock market goes down 10%, which is pretty, 10%, trust me, is a pretty stable, regular correction. Everybody expects that, and everybody lives pretty normal life with a 10% correction. But when mostly these corrections happening, 10% corrections happening in a consensus of 15%, that's probably the top of the consensus, when 10% is like, okay, it's livable. But when stock market is up 35%, obviously it's going to be much more of a correction than 10%. So when there's a correction happening, more than 10%, majority of retail investors is going to be affected extremely negatively. And maybe right now it doesn't seem like that. Maybe with the current policies it's not going to be that much of a problem. But again, it's still going to be calibrated by the Federal Market Committee, and actually I'm going to go back to the consensus, and you're going to actually understand why it's being corrected when when stock market goes up 35%. And the main reason is the previous two recessions, depressions of economy, bubbles that we had in the 2000 when all of those .com companies was extremely overpriced. A lot of people, a lot of investors bought the vision. None of the fundamentals backed, none of those visions was backed by the fundamentals, except of the couple of the companies like Amazon, all of these Google, Facebook, whatever the companies, the big company that exists right now, Microsoft, all of those companies obviously was legit, but majority of the companies was extremely venture. It was extremely venture startups with just no fundamentals, just pure vision. So because of that, we had in 2000 we had a crash. It was regulated by the interest rates, extremely low interest rates, zero interest rates. So business took a lot of loans and they had an opportunity to grow their businesses. Because of that, obviously economy started growing again. And keeping in mind, then we had another crash of over leveraged housing market. Again, it kind of attaches to the low interest rates of people just having extreme amount of loans in a housing market. Then we had another crash, but this time low interest rates was not a solution, because this problem was solved previously. .com bubble was solved with the interest rates. but this time we had literally the same downside. Even in 8 years we had no all-time, I mean there was one day of all-time highs. Can you just imagine in 8 years to have just one day of growth, break even, keeping in mind no inflation rate included, because people, and that's a problem, that's another problem. People who bought at the 2000, they just recently had a break even of their investments. If you're gonna include inflation rate, opportunity cost is not included, by the way. So you can imagine what type of, and mostly because all of those corrections was taking like years to bottoming out. Why? Because of the stock market growth was above the consensus of 12%. It was much above the 12%. So obviously the correction would take much longer and would be much worse than a 10%. So that's why Federal Market Committee started doing policies above the consensus of 15% or 12% in this range, above the year-to-year growth of stock market of S&P specifically, to not have this type of years of depression. And in this case, in a housing market, obviously low interest rate was definitely not a solution, since one of the reasons was interest rates, housing bubble, and obviously the fact that a low interest rate was not solving the problem of economy growth, since it was not making the new all-time high even in a 13 years since the 2000. Literally we had a break even of just a price. So definitely interest rate was not a solution there. That's why there was more policies there than of the solution than interest rates. So after that, obviously we had a reversal and economy started going back up. And yeah, still the current consensus is the same. 12-15% is probably the top of this consensus. If you're an investor, if you're keeping in mind, if you're buying above the 15% stock market growth, above the 15%, technically you're buying above the consensus. Technically you're playing against the regulators of the US economy. If you think you can outplay them as a trader, then you should definitely be an extremely professional trader to outperform them, because if consensus above 15%, it will be regulated. If consensus below the 15% or 12%, it will be regulated by the interest rates of all the policies, like it was during the housing market crash. So yeah, if you're a trader, definitely be careful with that. But if you're an investor, those type of regulators is the reason why you're not gonna backhold your investments in a stock market that you bought in the 2000 and you were backholding 20 years to just have a break even in your investments. Those corrections was made obviously for the majority, for the investors in the stock market. So when people are getting angry at the Jerome Powell because somebody bought the all-time high and now you're going down with the market because you're buying above the general consensus, this is pretty unprofitable, can be extremely risky. But yeah, be careful with that. So does Bitcoin is getting affected because of that? It's not getting affected too much. If you're gonna look at the general picture, just like everyday price actions is not being affected that much. Maybe there's some times when stock market starting crashing. You can see some correlation there. For example, stock market crash during the COVID crash. Definitely you can see correlation there, or just on recent. But in general, day to day, it's definitely outside of the stock market curve. So yeah, that's a news from, that's explanation of Federal Market Committee, what it does, what type of regulation it does. Also, on other hand, what type of regulators they are doing. Keeping in mind, does inflation rate, high inflation rate is positive for the people who in a stock market. It is positive for them. Does it positive for the people who is not in a stock market, who is outside of the stock market, who's living paycheck to paycheck just for and spending those money for the basic needs? Obviously they are not getting affected positively, because the only people who's getting affected positively is the business owners and co-owners, which is technically the retail investors, or people who bought the stock market, they are getting affected positively during the big inflation rates. But during the big inflation rates, those people who's living paying only for basic needs, who has money only for basic needs, you need to understand that all of those basic needs are also going up in a price. For example, 7%, they're going up in a price because of inflation, of inflation rate. And obviously all of those paychecks with the time is not affording all of the basic needs. So some of them starting losing like healthcare insurance, starting losing, they buying less gas, they buying less food or whatever, just the basic needs. So obviously you gotta correlate to the benefit both of those people, to also benefit people who's living paycheck to paycheck. So when high inflation rate goes 7% and above, you need to obviously close eyes on the people who is making money from a stock market. Now you gotta play to them people who is living just to the basic needs, and which is a lot. So in general it should be again average 2-3%, which is also attached to the this consensus is extremely of 2-3% inflation rates is extremely attached to the basic needs of just regular people and also to the people who's making money. But again, why consensus exists is just because when it goes above, inflation rate goes above, people who are in the stock market extremely benefiting, people who is not in the stock market losing their basic needs. When inflation rates goes down, when it goes down to the deflation, obviously people can afford things, but business is not growing and economy is just going down with the time because business is not growing. So the consensus is 2-3% for benefit both of those parties, and when it goes down or up, some of those parties, some of those type of people is always getting affected. And the only way to create the balance, at least the current way that we know, theory of 2-3% inflation rate for the economy of US. Okay, so that's a Federal Market Committee in 101, let's just say like that, finally. Like there's a lot of books about how economy or capitalistic economy works in the world, or how economy just works in the world in different countries, what type of models. That's the most important probably thing, the history of economy in my opinion, what type of models we had back in the days, what type of mistakes we did back in the days, what type of mistakes we can avoid in the future. So obviously United States has the most mistakes in the world in a capitalistic economy. That's why a lot of people a lot of central banks of different countries are following the US, because they have so much experience, so they're gonna make so less of mistakes. The decision is gonna be much more profitable and accurate. That's pretty much explanation of the Federal Market Committee, finally. So let's move on to the other news. Thailand announces crypto will be regulated as a means of payment, not as an investment asset. It will be regulated as a means of payment, which is pretty different model, but again will be. So when it's gonna be regulated, then we're gonna talk about what type of definition Thailand put there and what type of regulation already happened in Thailand. Right now will be is pretty uncertain word. Also, Kazakhstan shut down crypto mining farm till February. So data centers minting crypto in Kazakhstan were cut off from the nation's power grid this week and will remain unplugged for the rest of January. And keep in mind, January has 4 days left, so technically it's gonna be off for 4 days or what? Because next month will be in 4 days, so it's not a lot. So one of the reasons of shutting down crypto mining farms is shortage of electricity that is being blamed on crypto mining blackouts that is happening in crypto winter months. Those wars coming from a government. So yeah, we'll see what's gonna happen there. So yeah, it's pretty much all TA news for today. Obviously hoping for the Bitcoin to have nice bounce in the next months to the 40k would be pretty nice. Again, we don't want to have 1 year of a crypto winter. We'll see what's gonna happen there. So yeah, to the moon.